Namaste, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Friday morning, December 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The stock market highlights from Thursday, December 19, 2024. The market carnage continued for the fourth straight day. That's right. When the US sneezes, the rest of the world catches a cold. Though oft repeated and termed as a cliche, it has proven itself true once again. With the hawkish commentary coming in from the US Federal Reserve Chairperson Jerome Powell, global markets were quick to liquidate and sell off their holdings. While the mother markets sank into the red, Japan, South Korea, Hong Kong, and China followed. Instead of bucking the trend, domestic benchmarks took a tumble as well. India's benchmark indices Sensex and Nifty tumbled over 1% on December 19, marking the fourth consecutive session of decline as global market weakness weighed heavily on investor sentiment. The downturn followed the US Federal Reserve's cautious outlook on rate cuts, which dampened optimism. The Fed now forecasts only two rate cuts in 2025, down from its previous projection of four, a revision that unsettled markets worldwide. Benchmark equity indices, BSE Sensex and NSE Nifty 50, witnessed a sharp correction, settling down by over 1% each, tracking the decline on Wall Street following US Fed Chairperson Jerome Powell's hawkish commentary. Nifty 50 gave up the 24,000 mark, while Sensex crashed nearly 1,000 points. At the close of trading, the Sensex dropped 1.2%, shedding 964 points to settle at 79,218, while the Nifty fell 1.02%, losing 247 points to end at 23,951. It seems like Santa Claus has stayed away this December as frontline indices Nifty and Sensex slid for the fourth consecutive session on December 19, falling over 3% over the week so far, erasing over rupees 10.5 lakh crore in investors' wealth. The day ended in favor of the bears on the Indian market, with 36 out of the 50 constituent stocks of the Nifty 50 ending in the red. Bajaj Finance, Bajaj Finserv, Asian Paints, JSW Steel, and Grasim were the top laggards. On the other hand, Dr. Reddy's, Cipla, BPCL, Sun Pharma, and Apollo Hospital were among the 14 constituent stocks that ended higher. Broader markets also mirrored the benchmarks, with Nifty Mid Cap 100 and Nifty Small Cap 100 indices ending lower by 0.28% and 0.51% respectively. All sectoral indices ended in the red, barring Nifty Pharma and Healthcare, which ended in the green. Banking, metal, and tech stocks led losses. Infosys, LTIMindtree, and other technology stocks were among the biggest losers in the session. Since the domestic information technology sector is heavily reliant on services exports, a higher interest rate regime in the US sends bond yields spiking and strengthens the dollar, increasing the cost of IT service for US clients and potentially dampening demand. Shares of pharma stocks rose as outliners in the weak market, with prominent names like Doctors, Reddy's Lab, Cipla, and Lupin rising on December 19. Other stocks, including Laurus Labs, JP Pharma, Ipca Lab, Aurobindo Pharma, Abbott India, Natco Pharma, and Glenmark, also surged. Three Nifty 50 constituent stocks, Nestle India, Asian Paints, and IndusInd Bank, hit their respective 52-week lows in trades yesterday. From their respective 52-week highs, the stocks have cumulatively erased rupees 2.2 lakh crore in investor wealth, falling up to 44%. The fear index, India Wix, which gauges volatility in market, ended higher by 0.95% at 14.51 points. In the US overnight, major US stocks indexes stabilized on Thursday, but failed to hold on to early gains a day after the Federal Reserve revised its outlook for the interest rates and inflation triggered a steep sell off. The Dow Industrials rose less than 0.1% on Thursday, or 15 points to 42,342. Thursday's modest gain snapped a 10-day stretch of the declines for the blue chip index, its longest streak of daily losses since October 4, 1974. The S&P 500 fell less than 0.1% to 5,867, and the Nasdaq Composite lost 0.1% to 19,372. Brent crude is $72.67 a barrel. Gold is rupees 75,840 per 10 grams. Silver is rupees 87,200 per kilogram. Now for today's outlook for the Indian market. Technically, after a gap down, the market hovered within the range of 23,900 to 24,000 throughout the day. The short term market sentiment remains on the weak side. However, due to temporary oversold conditions, a quick pullback rally from the current levels could be expected. The key support zones are at 23,870 and the 200-day simple moving average, or 23,825. If the index remains above these levels, we could see a quick pullback rally towards 24,150 to 24,200. Conversely, if it falls below the 200-day simple moving average, or 23,825, below which it could slip to 23,750 to 23,725. Stocks on radar today: IGI India, Exide, Amar Raja, BASF, Zodiac Energy, KPI Green Energy, GE Vernova, Hindustan Construction Company, Dhanalaxmi Bank, Tollens Tires, Interglobe Aviation, Zodiac Energy, AU, Small Finance Bank, HG Infra Engineering, Hyundai Motor India, Bharti Airtel, New India Assurance Company, and AGS Transact Technologies will be in focus on December 20 today. That's it from me for today. I will see you again on Monday morning. Have a safe weekend. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.